Big picture analysis, special report, the COVID-19 sell-off, major indexes and market leaders analysis. So it's a constant effort by me and for my team to analyze the markets, to look at what's happening in stocks and in futures, and to get a good feel, better understanding for the conditions that's happening in the markets, the trends, and the big movements, whether they're bringing advantageous entries in time and price, or whether they're sending some really important messages or we should be avoiding those. When I bring that to you, it's for you to apply it to your own style and plan. We don't mean for it to be a buy, or we don't mean for it to be a sell. Sometimes we use the words because that's a reflection of what we think the highest probabilities are. But still, it's about you applying it to your own style and your own plan. And when you get into markets like this, it probably goes well beyond you as a trader. It's you as an investor. It's you looking at lifestyle, and big downside movements like we're having in the market now really have me and a lot of people that write me looking at those big things. 401ks, investment plans, retirement plans, they're all important to think about when you have declines that come as quickly as this one did. When I look at the conditions today, I want to see if there is serious deterioration, or where there might be serious deterioration, or if the big decline is offering some opportunities and still stocks that may be strong. We're going to look at that. We're going to evaluate the indexes. And all of these messages that we're going to see in here on the valuations of the market rhythms are to really have a better understanding of the market, those conditions, and what is the likelihood that this is just another downtick of some 10%, and then the markets are okay and move up to new highs again. We've been very accustomed to that happening over these last 10, 11 years, and for the Fed to be an influence in the markets and move it up. But eventually you get to a period where evaluations are a serious consideration, and I've mentioned that many times in the last couple of months, and recently showed you the valuations of the stock market to the GDP over 150%. That's known as the Buffett indicator, and it was an extremely high valuation, historic high valuation relative to the GDP. I also showed a big picture analysis where I looked at 6 market really long secular cycles and the final advances, and how this one aligns similarly with those. The length of time that it was up and the percentage that it had gained from the last significant low. In this case, it was around 44%. Those are all huge extremes. And when that happens, the market is susceptible to corrections, susceptible to major tops. And that's what we're going to look at right now. Now, today, the market has gone into panic mode and is now rebounding. The S&P 500 was down over 100 points again, certainly in what I would call free fall or crash mode. What got behind it for that big decline, and what else happened? Well, S&Ps, while they were down 100, the 10-year yields fell to a record 1.243%. We talked about yields getting sub 1% this year, and you could see we're starting to get close in there. The dollar fell quite hard. It's rebounded a little bit right now, as it does appear that it's made a top, and it's all about interest rates being so low here in the U.S., and the fact that the Fed is likely going to be printing a lot of money to cover this huge debt, and the debt that will grow if the economy fails to grow in here. And Goldman Sachs came out today and they lowered their earnings growth for this year for the S&P 500 to zero earnings growth. And of course, that makes the valuations of the stock market very suspicious. And then there is the COVID-19 news, which was really the trigger for all of this, for this hugely overvalued market, and a market that was ready to correct, for it to actually start to come down. South Korea, 500 more cases that they reported today. Now coronavirus spreading all around the world. So the word pandemic being thrown around. In Iran, the vice president has now contracted the virus, and the Iranian ambassador to the Vatican has died from the virus. All of this sending the markets sharply lower, and add to that Japan closes all of its schools for 1 month to try to head this off. And then Microsoft warned, which seems minimal when you look at all this. So massive amount of news that we're looking at and here in the background, and it scared investors as a decline that was accelerating turned into a decline that was approaching 10% on the downside. Our target for this correction, as we said in the beginning of the year, was 8 to 12%. So it's kind of gotten into that area right now. I have a hard time wanting to celebrate being right when it hurts so many people, and the background news is so devastating for thousands and thousands of families around the world. It is here, however, and we need to look at what that means to us as traders. So we're going to evaluate the markets right now. We're going to evaluate the rebound potential. And when I say that, I'm not recommending buying. There's going to be some stocks in there that look like they're hit supports in time frames where they should rally. However, you have to question whether or not you should be patient and look for selling opportunities rather than buying opportunities. We see when markets fall how hard they can fall, and I am certain there are many option traders out there that went from struggling selling calls and rolling and changing the level their call strike prices to all of a sudden being in trouble on the put side. And that's, well, you should probably watch my video on changing the mindset on rolling options that's in the library. So I know that there are option traders struggling with this. There are investors struggling with, holy cow, should I be selling my positions or not? And if so, when should I do that? So we're going to evaluate these patterns, the sells, the resistance zones, the sell resistance zones that show up that I think are high probability that stocks will attempt to rebound to. And we're going to evaluate the heavyweights. So I'm going to look at 19 stocks after I look at the indexes. And in here, you're going to see many revisions because things are changing so fast. So those people that get our charts, level 4 and then level 3, our static charts in the Slimulator rankings program, there's a lot of things that will be changing in there because the market's changing so fast. So that's our goal. We're going to look at the S&P 500, the Nasdaq, and 19 of the heavyweight stocks, 19 stocks that we could look at and get a major feel for the market. And then we'll talk about some of the evidence at the end. That's what we're aiming at right over here in this big picture special report analyzing the major indexes and the market leaders. And I think you're going to find it extremely valuable to you and in your trade planning as you move forward and investment planning. We're going to start out by looking at the S&P 500. Now, I'm going to own something in here that I second-guessed my own analysis looking at this, and that ended up to be maybe something that I should look at myself and not do. I had talked about these corrective periods. You can see that, and the yellow zones where it's very likely that markets move down. Now, when this declining phase came, and I talked about this yellow zone, I gave it credit for being so strong that only that little one or 2 weeks down was all of it. It turns out, when I look at the other major indexes, that it's more likely that this shifted cycle is the real one, and that the big decline that I had warned about here, where the risk increased between mid-January and early March, well, that's this right over here. So we are looking at the Nasdaq, which aligned perfectly with this low right over here right now also. And what that means when I look at this is that this decline came as expected on time, and the coronavirus is what caused it, triggered it. However, it was due very clearly, so you have this decline into this period right over here. And then what's likely to come is this rally phase. Now, we've put in all of the resistances, and they're all falling, all declining, but we got a big rebound today, so maybe we've seen a low. This was a key area right over here, a major 38% fib, right at that level, which it approached. These lines right over here are the old ones, and we're looking now at the new ones, these blue ones right over here, which are suggestive of making a bottom fairly soon, I mean, really a matter of days, and then getting some kind of a rebound rally. It could be for 2 weeks, 3 weeks. It could be for as many as 8 weeks, and then get another major decline into this next period out over here, which takes you out into April to July is where the risk really is going to pick up in here, and that pushed out by a month or so based on this pattern. So this is what I fooled myself with, and this is the reality of the real pattern, aligning perfectly with the Nasdaq. I'm going to show you also. Now I'm going to switch over to the daily chart because this is an extreme decline as you start approaching 10% on the downside in a very quick period. Here is the daily chart right over here, and you can see on the daily chart this big hammer bottom right over there. It got below these weekly supports and now has rebounded back into it. This is looking to me like a temporary bottom, and then you get a rally. Now, I didn't have that anchor point when I was preparing, so I don't really put the sell zone in there now, but you can see the sell zone right in here. Here's your beginning of it in the lower sell zone, about 30.97 in the S&P 500. Well, it's almost there already, right? So this area right over here, 31.54, 3,200-ish, that's really the area we're going to be looking for rebounding in there. But we don't really know that we have the bottom yet. And that could be a very choppy period getting up into that level. But then when it's over with, it's very likely to continue in the downside in a very significant way. And my belief is that even and hopefully, that we figure out, the world figures out a way to stop this coronavirus from spreading into pandemic, that the stock market will rally and then fail and then go into another major decline as we move heavily into this political season. So I think this is just the beginning, and it was triggered by the horrible COVID-19, and that there is a lot more to come, and we're in a very risky time frame.